Hi, and welcome back to the Intentional Wealth Update from Morton Brown Family Wealth. I'm Dennis Morton here with Cody Demmel. Cody, how are you doing?
Good, how are you?
Good. So I'm back from my 5-week sabbatical, and Katie's away. So we decided we were going to talk about something that we want to talk about today, baseball. Well, a little bit about baseball. Cody, I came back, and the Orioles are in first place. Unbelievable.
Yep, and the second best, record in baseball.
And the Phillies are respectable, unwatchable, but respectable.
Yep. Sometimes they're watchable. Some games are pretty tough, but overall they're doing pretty good. They're first in the wild card, so we'll take it.
That's good. Well, this year is kind of different for baseball because in the offseason, there were a lot of changes put in place to actually make the game more watchable. What are some of the things that changed this year in the game and just how it's run?
One of the changes was a pitch clock. So before, the pitcher could take pretty much as long as he wanted to get a pitch over home plate. So baseball wanted to speed up the game. So they implemented a pitch clock, both for the pitcher and actually for the batter. The batter has to get into the batting box at a certain period to speed up the game. And then they also made some of the bases a little bigger. So it made the distance between the bases a little shorter. So there's a lot more steals and running this year in baseball too.
Yeah, no more Garcia Parra 5-minute long batting glove routines going on. Remember back in the day. It's interesting. My father, this is a nod to my dad. For many years, he said, if they ever make me commissioner of baseball, I'm going to do this on the first day, which was funny because he was interviewed in the Baltimore Sun this year as kind of a man on the street thing. And they asked him what he thought about all the rule changes. So kind of a funny thing. But Cody, that got you and I thinking, all right, I'm going to make you the commissioner of finance. We're going to create this role and you get to go in and on day one, what are you going to do if you're in charge of the financial world? What do you think? What would you change?
I mean, I think there's been a good amount of changes here over the last couple of years just to try to make everything more feasible, more upfront, whether it's regarding the fees or, acting as a fiduciary. But I think that you could go a little farther into some of those aspects. So trying to make sure all the financial advisors are acting as fiduciaries, I think would be very important. So just making sure that you're doing what's best for the client, which isn't always the case. And Dennis, you can kind of go a little more in the detail about, how you get started in the industry compared to how we are now, both as CFPs. Then I also think one of the other things I thought would be important is just being more upfront with the fees on all the different products that are available.
Yes, it is one of the most complicated things. When we meet somebody and they're thinking about coming on as a client and we'll go over their statements, one of the hardest things for us to do, and it's so frustrating because I've been in the business almost 20 years now, is to tell them who's getting paid what. How much their advisor's getting paid, the custodian, the mutual fund company, and transactions, the fees like this. I'll look at a statement and sometimes I'm like, I have no idea what your expenses are because they're all baked in different places. So I absolutely agree with you. And to your point, wave our magic wand and make something uniform. If you want to be an accountant, you need to be a CPA. There's kind of a standard, for CPAs in the public accounting. If you want to be an attorney, you need to pass the bar. But in finance, you and I both got our start the same way. We had to pass our Series 7 license, which is the license to sell securities. You study up for a little bit, you take a one-day test, and boom, you're a financial advisor at a big Wall Street firm. But neither you nor I have our Series 7 anymore.
Yeah.
As a registered investment advisor, you don't need it because you're an advisor, you're not selling product. But people don't see the different ways that people come into the business, and there's no uniformity. It's kind of like the Wild West sometimes.
Yeah.
You know where I'd start if I could fix something on day one. I'd walk in, just get my cup of coffee, and I'd ask to see everyone's statements, and then I'd throw them all out. I think statements are terrible. They tell us nothing. There's just reams of paper or PDFs, and you and I have seen some of these recently. Across our desk, you can't tell what the strategy is. It doesn't give you any information. It's hard to figure out what your performance is. You have to sit there with a calculator, packing it in yourself. And getting there, I would make it a rule that your statement could be one page, a front and back, a PDF. We'll send you all the disclosures at the beginning of the year if you need that stack. But just simplify, because I think it's daunting. People don't know what's going on.
I agree. I mean, even majority of the statements that we see now, all the important information that goes over, what funds they're in, what the performance has been, is really in 2 pages. But then they have another 5 pages of disclosures. They have like 2 pages at the very beginning with very basic information. So I think that would be awesome.
Yeah. Another pet peeve and thing I would change is mutual fund share classes. There's probably some good reason. I'm not conversant enough because, frankly, when I see A shares, C shares, D shares, R shares of the same mutual fund, it crosses my wires and I can't function. But these things, it's become so convoluted in different share classes. Again, people don't know what they own. Sometimes they can't get out of them. There's different costs involved and conversions. And frankly, it all comes back to how they're sold and positioned.
Yeah, exactly.
So, I mean, to give you an example of what we mean by mutual fund share classes. So if you were to go out and buy a mutual fund A share, typically that involves an upfront commission. The advisor would get paid upfront, and there's usually break points where it lowers the more you put in, but that fund fee is paid upfront. And then you have an internal expense that's ongoing inside the fund that pays for the management. So there's how the advisor gets paid and how the fund company gets paid. But then there are things like institutional shares or I shares or C shares that either don't have a commission or spread out over time. C shares, I don't think they use C shares anymore. I'm not even sure.
Yeah.
We certainly don't use them. But just this migration of the separation between how the fund company gets paid and how the advisor gets paid makes it so confusing for people. We even encountered a situation recently where someone couldn't move a mutual fund because it was in a share class that I didn't even recognize. And there's it can't be held outside of here. So it's an obstacle, one of those gates that finance puts between you and your money sometimes.
Yeah. And it's kind of the same way with some different other investment products that are out there. Like we've seen recently over the past couple of weeks, some structured notes or structured products that you don't really know upfront what the fee was or if there's an ongoing fee towards that product. Same with preferreds. It's all kind of hidden in the inside, and it's very tough to find out what the commission was or what the ongoing fee is for some of the other investment products that are out there.
Yeah. So the good thing is if somebody made us the commissioner of finance, we'd have some benchmarks from baseball, some things we could learn. But we were just talking about some other reasons why baseball and investing are somewhat similar, because you have the markets open hundreds of days a year. Baseball has the longest season of any at 162 games. And you get a lot of statistical significance from that, because when you have a market that's open hundreds of times a year, the ebbs and flows of the day matter very little. It's these long trends and things that evolve. Same thing with baseball. Over 162 game season, that's a lot of, especially 162 games between 30 some teams over 150 years. There's a lot of data there.
Yep.
And you have to kind of step back and look at a very high level, right?
Yeah, no, that's a very good point. And I think kind of what we were talking about a little earlier is no matter what your favorite baseball team is, they may go on a 4-game losing streak, a 7-game winning streak, but over the long haul, obviously you hope they have a pretty good winning record like the Orioles and Phillies so far, knock on wood, are doing this year. But they can lose 3-4 games in a row. That's not going to end the season, but it's what they're doing over the long haul. And that's kind of the same way with investing. You can have a bad week within a year or even a bad month within a year, and it's not going to derail your whole plan. Your whole plan. If you get out of investment and then try to figure out when to get back in, that's something that could potentially derail the whole plan going forward, or at least a couple of years of returns.
Yep, you're right. Baseball's a game that rewards patience. I also think it's interesting that some of the most hallowed records in baseball have to do with consistency. Like Joe DiMaggio's 56-game hitting streak. I'm a Baltimore guy, so Cal Ripken's the Ironman streak. Those things where if you're showing up and playing 162 games a year for 18 years or whatever it was, or hitting in 56 straight games, that's a third of the season. But to be able to do that is just incredible, because you're in the Hall of Fame if you make an out 7 out of 10 times. Yeah. So you have to kind of be there for when the hits come. There's a line that I've heard used that eventually everyone starts to look like the back of their baseball card. Power hitters usually don't forget to hit with power. Consistent hitters usually don't forget to hit with consistency, but you might have to wait long periods as they ebb and flow.
Yep. No, I think that's really important, especially when you're looking over the long haul. And as a Phillies fan, that we're hoping Trey Turner kind of regresses back to what his career average has been, because to the start of the season, he is not living up to the $300 million contract that he signed. So we're still holding out that the rest of this year he'll pick it up.
Well, we're always cost sensitive here at Morton Brown, which is a good reason why I follow the Orioles, who what do they have, the second lowest payroll in baseball or something like that? I think their payroll is slightly higher than ours at Morton Brown, and yet they're winning a lot of games this year. but it's really hard to predict. You got to focus on the things that count, and paying high costs for things doesn't always pan out much as it does in investing. You got to know the pieces and put them together properly. All right, so there goes our baseball edition for the summer of 2023. We'll do another one in the fall if the Orioles and Phillies face off in a rematch from 40 years ago. 40 years ago, 1983, the Orioles and Phillies played in the World Series, and Cal Ripken was MVP, and Mike Schmidt was in the game. It was a great year. So we'll see if we get that again this year.
That would be awesome.
That would be fun. All right, if you have any questions or concerns, or if you have something that you would like to see change in the finance industry that can help us to be positive influences, in the dynamics of finance, let us know. Otherwise, look forward to seeing you again soon.
Bye.